Hi, everyone. Welcome to the ROI Blueprint Mexico edition, when we uncover the strategies, insights, and experiences that help successful entrepreneurs and investors thrive in Mexico's real estate market. I'm Monica Leder, and today's episode is brought to you by Kodak Capital. In today's episode, we are with Jacob Murphy. But before we dive in, can you tell us, please, Jacob, a little bit about your background and how you got into revenue management?
Thank you, Monica. I originally got started doing MRIs for doctors, right? Which is numbers on a screen that interact in a certain way to get us great pictures for the doctors. But now I'm in revenue management, which is numbers on a screen that interact in a certain way to get us great revenue for owners. So I've always been kind of drawn to the numbers, right? But then I spent a few years after I left that educating others about Airbnb, coaching them through underwriting, market analysis, pricing, which I used to do on spreadsheets loaded with formulas. And so it's always kind of been a natural progression, wanting to work closely with investors, use numbers in a smart way, and keeping them educated on how those numbers interact to get us a great revenue.
So, Jacob, for those unfamiliar with the concept, how would you define revenue management in real estate? And why is it so crucial for investors right now in Tulum?
Right. So revenue management is often defined as the right booking at the right time to the right guest at the right price. And we want all three of them. We want the timing, we want the right guest, and then we want them to pay the right price. And guests in Tulum are going for a certain reason, and we have to know why and what they're actually looking for. So, for example, a business traveler in San Antonio is looking for something else entirely. A family trip to Orlando is looking for something else. So we have to know what it is that they're actually looking for. So when we say to the right guest, we mean, are we fulfilling what they expect out of this, right? And then the same thing goes for the timing. There's elements of when are they looking, and so when that happens, we can aim properly and price it appropriately.
That's wonderful. So, right now in Tulum's rental market that has grown rapidly in the past few years, what are the key differences between managing pricing here versus in other global markets?
Yeah, so this does remind me a lot of Orlando. I just mentioned it. The supply's gotten really high for the demand, and we're waiting for that to catch up. So the area of Orlando is developing a lot. Tulum is developing a lot. The city and the region are pouring a lot into development to try to bring people
Yeah.
in so that this demand can meet that supply. And I think as word gets out, everybody's going to see how beautiful this place is, and they're going to obviously be drawn to it. But it is a cycle, you know. It is some of the lowest average occupancies for a city that I work with, which means unfortunately, sometimes we got to set our emotions aside and we got to use what the data is telling us. We got to use what the market's telling us. And if we want to get close to the occupancies that we expect, we have to use that data in a really smart way.
So, Jacob, what is the data showing?
Well, the data is showing there's about a 7 or 8% increase in the number of listings on the market. And so, of course, with an additional supply, and if the demand isn't meeting it, then we're going to see some lower occupancies. But we have to be strong in that data, make sure we understand the metrics to get through this for the optimistic future that I see ahead.
Fantastic. So, what are the metrics that you focus on when optimizing a property's revenue, like occupancy rates, ADR, RevPAR? Can you break them a little bit down for us?
Right. So, well, occupancy is the percent of days we have booked. So, out of a 30-day month, 10% would be 3 days, 50% would be 15 days. Everybody understands this. ADR is the actual daily rate that we're charging. And that's not upsells, that's not taxes or cleaning fees or anything. And this could be whatever. RevPAR is the key one because that's occupancy times ADR, right? And 100% occupancy at $1 a night would be $1 RevPAR. So for a 30-day month, that's $30 revenue. Wow, right? 50% occupancy at $100 a night, $100 times 50% is $50 RevPAR. So times a 30-day month, that would be $1,500 revenue, right? But the
Yes.
trick comes from what happens if we lower it $12? What does $88 ADR get us? Does that get us 65% occupancy? And what total revenue do we actually get from that? And so it's balancing the two because I could charge $1 a night and be fully booked, but that doesn't matter. And I could also charge $800 a night and get nobody. So I got to find that balance of what actually results in the top revenue.
Of course, how it all levels, and you can see always how profitable the market is, and your property will be short and long term. So with this, how does seasons affect rental pricing in Tulum, and what are like the strategies to use to maintain the profitable during low season?
Low seasons, right? So it's supply and demand, right? Econ 101. We can see in the past how historically people are booking in a month, what their occupancy is for that particular month, what their lead time is, all of that. And Tulum specifically, I mean, between high season and low season, it can be a 6 or 7 times difference in the revenue, or something like 3 or 4 times the actual occupancy. Like, people expect high season to be almost fully booked, and then low season somewhere around 20-30%. But whether it's Tulum, whether it's wherever, during low season, the strategy is the same. So if we expect low demand, we want to lean towards being the first and being aggressive and get through it. And if we expect high demand, we lean towards being patient and maximizing revenue and being very selective about the demand and filtering for it. But I will tell you, the lion's share always goes to those top properties, regardless of the season. And so what that means is, when we look at a low season, the top properties are getting booked year round. Who gets left behind are the middle and low performers. So when we're talking profitability, depending on your overhead expenses, I suppose, that's the difference often between making money, breaking even, or actually turning a profit.
And how does technology and AI driven prices tool help optimize revenue and vacation rentals?
That's a great question. So I think I mentioned this at the top, but I used to price using spreadsheets and formulas and all of these other things, and we could use past performance. And so the difference comes from being able to use technology to acquire lots of data all at once for a particular market and see it in real time, which is game changing, because if we're just making decisions based on what happened last year, we can't see what's happening in the future for everybody else. We can only see what's happening for us. And so what makes this special these days with the tools we have, we can not only see the information from last year and all these previous years and make these trends happen, but we can see the difference between the performance last year and this year and make smart decisions based on that. So that alone, again, coming from where I came from, I'm very happy with where technology is, because it makes this really, really nice.
Yeah, it shows you like all the different panoramas, even worldwide.
You can filter for any of these areas. Whether it's your own, you can filter by how's the performance of a 3 bedroom, how's the performance of a 2 bedroom with a pool but no hot tubs. I mean, you can get very granular
Very
about
specific.
the data right now. Yeah.
Oh, that's wonderful. And what are the main advantages and disadvantages of short-term rentals versus long-term rentals in Tulum?
Well, I'm not a lawyer. I can't speak to the legalities of
Yeah.
Mexico. But in the US, at least, what makes it nice is there's no messing with squatters or evictions or any of this other stuff. You get to use the property, which is
Yes.
huge, and there is a really nice potential for profitability. But that trade-off, like anywhere else, even worldwide, you're dealing with regulations, you're dealing with licenses, and so you just got to make sure that you're following that rule for your particular area. And as long as you have that sorted out and you understand seasonality, that's another thing. Some people, their risk reward, their tolerance isn't that high, and so they would rather the I guess the steady income. But just if you can understand that high season, you're gonna need to set some of that money aside because low season might be brutal. As long as you can handle that and you have that discipline, I think you're in good shape. Now, when investors would come to us and they would say, "Hey, I've got this long-term rental. Should I convert it?" The thing you do first is you got to inspect what you got to run the numbers in both cases, and you can actually see what the difference is going to be. And so again, I've used this word a lot already, but just the data that you have to use to make those smart decisions. It isn't just what's my risk tolerance, which is a big piece of it, but will this actually make me money, which is going to be massive.
Will it work? Okay. And many investors nowadays believe that setting a price and listing on Airbnb is enough. What are the biggest mistakes you see in pricing strategies, and how can they be avoided?
Well, you said it right there. They'll set it and forget it, right? They set whatever, $100, and it's like that year round. They'll set $150, but even day to day, there's a difference. Oftentimes, around 10% you can make extra just on the weekends, at least. There's some markets I'm in where it's double the amount of money on a weekend. So you could be losing a lot if you don't pay attention. But the big picture of the whole thing is actually managing that demand. So whether it's pricing, whether there's a higher demand and you can raise the prices, whether you have so much demand that you can filter and only accept the length of stay that you want. So if I only want to see 7 night stays that check in on Saturday and check out on Saturday, that's perfect. It just really depends. You got to make sure that you're digging into this. You're filling in orphan gaps. You understand the cancellation policies. How are we managing this demand? That's a big piece of it. And then, we kind of mentioned it before, but pacing that occupancy, making sure the booking lead times, all this is going to play a part in making sure that we have the right person at the right time for the right price and all of that.
Yeah, just covering all the areas. So, with major infrastructure projects like the Tulum International Airport and the Maya train, how do you see these developments impacting in rental prices and occupancy rates?
Yeah, so I think it's what I was talking about earlier, right? So when these updates happen and you have a market that's investing in itself, we can see more guests choosing that as a destination over other areas. So we've got that potential, right? And the other thing I've noticed about Tulum is that it's big for digital nomads and people who want to work from anywhere. And I think that sets up Tulum nicely to be a kind of like a hub for them, because if they can travel easily with the train, they can settle here and move up and down the coast or wherever this is setting. And then as we got international routes coming in, after the airports coming, I think that continues to see improvement. The train routes and the luxury side of this continues to get improved. I think we see people coming back and even staying for extended stays.
That's, I think, what's happening right now. One of the biggest changes in the last couple of years has been that also. So, for investors looking to enter the market or improve their current rental performance, what are the top three pieces of advice you give them?
Um, Number one, we mentioned set it and forget it. So
Yeah.
use dynamic pricing software. Look at the data and make sure that you understand it. Number two is probably optimizing the listing that you have. Airbnb themselves have said 80% of a decision from a guest comes from your cover photo alone. And so if you're out here just taking non-professional photos and you're not optimizing how you're presenting your property to others, it's not going to be attractive to them, right? So learn how to optimize on the platform that you're using. That's going to be key. And then another thing, particularly with Tulum and highly competitive markets, is look around and offer something that no one else has, right? We mentioned getting the right guest. Well, if I'm positioning myself for business travelers,
Yes.
then I need to make sure I'm offering them something that maybe nobody else has. Or if it's for families, make sure I'm catering to that. And I need to be able I need to give them a reason to select me over everybody else, right? Because a lot of it's a lot like we see it in Florida, we see it in other vacations. People will just kind of rent what I call four walls and a bed, and it's like, well, why are they staying with you? This is they could get this at a
What makes the
hotel. They could get this
difference?
really anywhere. What's special about you? And so we have to offer things that nobody else has. And when I don't even remember 80 something percent of people have access to a pool, that's huge. But what else can we do? What makes us special? And so those are going to be big to differentiate yourself. When everybody is kind of offering the same thing, you gotta do something else.
We're doing very good there. And where do you see the future of Tulum's rental market in the next 3 to 5 years?
Look, I've been helping investors look at markets all over the world for years now, and one thing that's been true is that it's easier to be the best in a market, even if it's competitive, than it is to convince people to travel to your dead market. People will find a market with two or three properties in it and they'll say, oh, the potential's great, but nobody wants to actually go there. And so the investment from the area and from the city, from the region, is massive. Because again, I mentioned Orlando a couple of times. It's a lot like that, where people are drawn to the parks that are in that area.
Yes.
And same thing, there is a reason to go to Tulum. There is a reason to visit here. And with these infrastructure improvements, roads, train, planes, all this, it's going to be a game changer. So the next 3 to 5 years should be very, very exciting.
Fantastic. Well, Jacob, finally, we need to know, where can our audience find more insights or connect with you if they need help optimizing their properties?
Right. So, well, if you're a resort or an investor and you have properties here that you list, or really anywhere around the world, we can hop on a call and I can review your portfolio, your property list, provide some additional insights, and if it makes sense, of course, we can work together. Destinationasset.com.
So, Jacob, thank you very much for walking us through your incredible journey. Your insights provide, of course, a powerful blueprint for those looking to break into Mexico's real estate market. For our viewers, if you're interested in learning more about Tulum's growing real estate market or exploring investment opportunities, be sure to check out Jacob's website, which he just quoted. And if you enjoyed this episode, don't forget to subscribe, leave a comment, and let us know what topics you'd like to hear next. So stay tuned for our next episode where you'll uncover the blueprint for success with another exciting guest. Thank you for watching. Thank you, Jacob.
Thank you.